Good morning, people. It's your man Joshua Pondexter, broadcasting live on three platforms: YouTube, LinkedIn, Facebook. So wherever you are viewing us this morning, we appreciate you. Right. So the topic this morning: the need for a permanent tax strategy. Right. So once again, I'm Joshua Pondexter. My company is Stone Consultant LLC. We're an estate planning and asset protection um, company. We're consultants. So um, today we're putting on our tax hat, right? Our tax strategy hats, right? So this is critical, right? To creating some financial independence, some financial freedom for yourself after 25, 35 years of working life, your biggest bill, your biggest expense every year after year is taxes, right? So we want to talk about some of those taxes that most people don't even think about, right? Income taxes, yeah, that's the one that keeps us up at night. We'll look at that paycheck, both federal and state. There's a few states in these United States that don't have a state tax. Uh, Wonderful, beautiful. I don't live in one of them, right? Okay. So taxes, 50 to 70% of your income is exposed to taxes. Therefore, you need a permanent tax strategy, right? So first taxes, income taxes, both federal and state. Then you have state and local taxes, right? So you're like, where are those at, right? Well, just look at your local municipalities. They taxing you too, right? You go buy some stuff, you get the state sales tax, and you get the local tax. It's taxes, 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 right? Um, Property tax, right? So if you own property, it's a tax for that, whether it's residential, commercial, taxes, right? All right, so we got a blessed morning. Teach the people, sir. Yes, sir. Yes, sir. All right, brother Ware. So this is one of your favorite topics, taxes, right? So now, if you have a business, you have sales taxes, right? So especially if you're selling uh, soap and other type of products and hair, it's got a sales tax, right? Value added tax. That's a new one, right? There's only one state, Michigan, that really depend on value added tax. But as the tax um, burden gets shifted from corporations and wealthy people, uh, they might go after some more states might include that value added tax on the production of products, right? Um, Excise taxes, right? That's another tax. Payroll taxes. So this is the taxes. Let me give them to you again, right? For an individual, income tax, state and federal, state and local taxes, whatever those are, sales taxes, fuel taxes, property taxes. And then if you have a business, we're going to layer on some more taxes. You got the business sales tax, you have value added tax, excise taxes, payroll taxes. So tax, that's throughout your entire life, right? And then finally, those of you who are ambitious and want to create some wealth for yourself and the next generation, right? There's an estate tax to plan for. So if you don't know, you need a permanent tax strategy, right? Something not temporary, right? Permanent tax rate. Those who um, create a permanent tax strategies, those are the individuals that particularly, retire well, extremely well. Listen, let me tell you what a strategy is, right? A strategy is simply a plan of action intended to accomplish a specific purpose. And this is to permanently reduce your taxes, right? In the case of our tax clients, the specific purpose is to permanently lower your taxes for the rest of your life and for the generations to come, right? So not only are we interested in lowering my clients' taxes, but the next generation. We want to educate you so you can educate your children, right? Now, say for instance, you're a single person, and you make $100,000 a year, and you stay single all of your working life, 20 years, 30 years, right? And so, not a lot of deductions. So $30,000 of that is exposed to taxation. So let's say Uncle Sam is getting 20, right? 20 times 10 years is 200,000, times 20 years, 400, 30 years, $600,000 that you have left with Uncle Sam just in cash. But let's look at if you would add a little compound interest on there, say 8%. So that's 600,000. That's where your millions are. That's why you can't retire financially independent, right? So I think one of the things that the reason that most people have a temporary tax plan, because it's easy. That's what most of your tax advisors do, your tax preparers do. It's just temporary, from month to month, from year to year. What we're going to do this year, right? So let's say easy, right? You change your deductions on your W-2 so that you pay little taxes. That's easy. That's temporary, because you're going to run up on a problem come tax time if you don't have a permanent strategy, right? So that's what's important. So most people, and I have seen it in my own practice. I will tell you, the statistics we've been in tune to, I don't know, for 20 plus years, right? That at age 100, brother Austin, good morning. At age 100, if you no 100 people at age 65, 95% of those people end up dead broke, right? Only 4% are financially independent. 1 is wealthy, right? So now, is that true? Have you seen those numbers? Yes, true. Because I have started out with my clients with tax strategies, and after a year they disappear. They think they're done, right? No. This is year after year. You need to create a permanent tax strategy, right? So if you go disappear, you haven't created anything permanently. So you're going to end up at age 65 broke. Yeah. So it's like, well, how can you say that? Well, I have been dealing in the retirement space for over 2 decades. I have seen people who work for companies, I'm talking about consistently 20, 30 plus years, and they retire with $15,000, $35,000 in their 401ks. I'm like, how the heck is that? They were never contributing. They were never saving for retirement, right? I'm gonna tell you. And that model is gone, right? Only 15% of private companies have pensions, right? So you're not about to go to work and get a pension at no private organization, right? Only 15% of the workforce work for the military, the public, or the national services, right? So let's say, which is not 30%. Let's say it's 30%. So that's 70% of us as Americans, or probably more, that we're dependent upon planning our own future, right? Our own future retirement. This is why you need a permanent tax strategy. Am I talking to the choir? You need a permanent tax strategy, right? So tax savings will, when we develop you a permanent tax strategy, the tax saving we'll never give it back to the government, right? So if we create you a tax plan and the only thing you're doing with it is bolstering up your 401k and things of that nature, you giving that money back to the government. That's not a permanent tax plan. The thing is to reduce your taxes, create wealth, and so you'll never ever again give those tax savings back to the government. That's part of a permanent strategy. It's not something that could be simply done, in 12 months. You have to develop this attitude. Then you have to do the things that will put you in that position, right? Most tax planning is temporary because, like I stated, it's easy, right? So most people don't have. Have you ever sat down with your tax advisor and they go like, "Oh, okay, we'll do your taxes this year," and "Oh, okay, you've been working for 10 years, okay? What? Okay, we need to create a tax plan for the next 20 years of your working life." Have that conversation ever occurred with your tax preparer, your tax advisor? I doubt it. I doubt it, right? So let's talk about tax planning, right? Temporary. When you defer taxes, right? This is what's happening, right? You contribute money to a 401k or you put money into annuities and things of that nature, which is tax deferred savings, right? Temporary tax savings. You're going to retire poor. You have limited earning potentials, so you didn't put your money in the 401k. They have chosen the I don't know what that no means, Anderson, right? No to what? So, so don't know what that means. Give me a little bit more meat on that, Addie, on the no. So you're going to retire poor. You got limited earnings because the plan providers have selected where you can put your money, right? You have restrictions on your withdrawals, right? So you didn't put in this plan 10, 15 years and save that money, and you got a great investment opportunity. You can invest in a chicken shack, barbecue joint, right? And you need some money, right? Credit bad or whatever, right? You got a pot of money here that you cannot get to, right? Limited control of your money. That's why they want to put your money in these tax deferred things. And why they're tax deferred? The government has you saving tax money for them, right? So these deferral strategies, all you're doing is kicking the can down the road, and that tax bill is getting larger and larger, right? So I ain't gonna say I'm gonna retire poor. Well, no tax preparation hasn't worked with me. Oh, okay. Thank you for the clarity, Anderson, Addie. Thank you. Yeah. That's what I'm saying. It doesn't happen. So at this particular point, I think it's time for me to drop the reality. JoshuaPondexter.com, tax strategist. Holler at your boy. We'll put you on a 20, 30-year plan to permanently reduce your taxes. So if you permanently reduce your taxes, we already, I don't know where you're tuning in. I'll go back over this information again so that, those who are on live can get it or go to the recording wherever you're watching this at. So permanent tax savings, you retire rich, right? Ultimate or unlimited earnings, right? So if I'm in control of my dollars, I can invest them and determine it's unlimited, right? Unrestricted withdrawals. If I need to withdraw some money for an emergency, a surgery, for a child, for a family member, hey, it's in my control, right? And uh, unlimited control, right? So that's the difference between a temporary and a permanent tax plan, right? So we talked about the fact that, pardon me. All right, we talked about the fact that why we need a permanent tax strategy, because our income is just exposed to taxes, right? Income taxes, both state and federal, right? State and local taxes, property taxes. If you have a business, you got sales taxes, you have value added taxes, excise taxes, payroll taxes. If you own property in your business, property tax. So tax, tax, tax. 50 to 70% of your earnings is exposed to taxation. So you need a permanent tax strategy. All right. And if you want to retire wealthy, you need a permanent tax strategy. So number one, to put yourself in a permanent position, you need to have a business, right? Because if you're a W-2 person only, you don't have very much control of that, right? If you have you have a small business that you're working on the side, your side hustle, now you can begin to control your tax reality. That's the first way to start, right? And then I suggest that you organize that side hustle into an LLC, because that signal to the tax people, Internal Revenue Service, that you're serious, that, oh, this person took the time to organize that company and they're running it like a company, right? So that reduces red flags, audits, and things of that nature. But if you get audited, who cares, because you're running your business correctly, right? So a permanent tax strategy is not only for you, it's for your future generation. I'm saying I hate to use wealthy people because I don't know any. I just read about them and what they do, right? They don't pay taxes. JP, the Chase family, the Rockefeller family, the Rothschild family, these folks are not paying no taxes, right? Just think of all those hundreds of millions of dollars that they have coming in, that they got zero tax reality. They have a permanent tax strategy. The Rothschild family has been contiguous for over 200 years. Could you imagine 200 years paying no taxes? And I'm just trying to get you to not pay any for 30 for your low earnings. So then you can teach your sons and your daughters how to do what you did, reduce their tax liability legally, morally, and ethically, right? So this is what the conversation is about, is creating a permanent tax strategy. So there's no sense in beating around the bush. If you don't have a business, there's not much that you can do, right? So I don't give up your job, because I wish this life on no one, being an entrepreneur, right? People talking about they want to make it look sexy, no, and it's not easy, right? It takes a constant thinking. Can't even go to sleep because you're thinking about your business and earnings, and whereas you can go to your job, just do your little job, get your paycheck, call it a day, right? But you need a part-time business. Keep your job, please. Keep your job for 20, 30 years. And, I have clients, I have friends that have retired from the post office. Now they're working their job, their business full time. They started, 10, 15 years part time doing a little hustle, right? And now they can transition into a permanent job, not have to worry about keeping the lights on, and rents and mortgages and things that we enjoy, right? So number one, you have to get yourself a business, right? So what type of business am I have? I have an LLC. I'm gonna have an S corporation. I'm gonna have a C corporations, right? Those type of detailed answers are on some of my videos on my YouTube channel, right? You can go and look at that, or you can avail yourself of a consultation, JoshuaPondexter.com, and then we'll talk about what type of business you're starting, what's your objective with the business, what type of structure you should be in. Had someone call me this week, and we talked, and they were like, "Oh, well, I set up a company, I set up an S corporation, I did this, and I did." Who told you to do that? Well, I said, "Who's your advisor?" She said, "Well, I'm my own advisor." I said, "It sounds like it, right? No thought, no planning, no took the easy route." That's what most people do. When you DIY very technical stuff, you're taking the easy route, right? Where spending the money with a professional, right? Get it done correctly, get yourself on a solid foot. So you need a business to create a permanent tax strategy, right? And you can run that business on a part-time basis 15, 20 years, right? Don't leave your job until you have at least on a part-time basis start making more money than on your full-time job. So I've been an entrepreneur since 2002. I mean, this is my bragging here, right? I had a job paying me $135,000 a year, stock options, spent some counts. I'm talking about I was balling out of control, right? And to leave that to come, so I'm telling you, you got to replace that income on a part-time basis, and then you have proved to yourself that you can do it, right? If you don't do that, stay on your job, stay working, right? So there is a need for permanent tax. The number one need is for yourself, and then to pass this knowledge on to the next generation, right? So you need a business. The things that you invest in from your business are important. Real estate, the type of stock you invest in, the sectors you invest in, right? So because we're not going to save a bunch of tax dollars from our earnings on our W-2 job, but then take that money and create some other assets that's going to do nothing but create more taxes. Give those tax savings back to Uncle Sam. That's the complexity in creating a permanent tax strategy. So, I started a business. I was pumping over $20,000 a year to Uncle Sam. I was able to start a business, and I was able to save that 20 grand, put it in my pocket. What I'm gonna do with it? I'm gonna go buy some Amazon stock. I'm gonna go buy some Google stocks. Only thing you're doing is taking those tax savings, buying something, and creating more earnings so that you can give back tax to other people. Brother Kevin, good morning. Thanks for tuning in, right? So if you need a tax strategy, holler at your boy, JoshuaPondexter.com. That's why we're here. And I tell you, the linchpin, the beginning of it all is starting yourself a business. And so this is what we preach on this channel all day long. Start a business, right? Right. And, well, I don't have time. Well, Uncle Sam said you only need to commit 4 hours a week to your business endeavor, and you're in business, right? And you can get all these wonderful tax deductions, tax savings from starting your business and then running it correctly. All right. So, listen, I think that's all we got this morning. But I'm gonna tell you, you need a permanent tax strategy. You need. So, anyway, it's right. Oh, I do got a book I'm gonna recommend again. I probably recommended this 10 times, right? Tax-free wealth. This guy here, Tom Wheelwright. Let glare on that. All right, Tom Wheelwright. He's a CPA. And don't get excited, because these guys when they write these books, they just giving you some concepts, right? They're giving you some thoughts to go research on your own. He ain't telling you how to execute because he wants you to contact him. But he can put your frame of mind in the right thing and sort of think about tax-free living. Start thinking about creating a permanent tax reality, right? So you said, well, I'm retired, right? Well, I have been doing this long enough to run up on men and women in their 80s who retired when they were 65, and they retired from with great pension jobs, steel mills and stuff like that. Could you imagine what a pension looks like from age 65, 75 to 80, right? A 3% COLA adjustments. No, no. You need to keep earning as long as you can. You need to keep your a permanent tax strategy so that you can build wealth for yourself. Most people are not going to do this. I already know. At 100 people at age 65, 95% of them are dead broke, right? So they said, well, Joshua, you tough, you rough. No, I'm not gonna let you waste my time because I already know how you move, you the 95 percenters, right? I know what the percenters do. They left a pattern after seeing so many 5 percenters, after working with so many 5 percenters, right? I know exactly what they do. And so when I talk to you and you're talking like a 95 percenter and you acting like a 95 percenters, we're not going to go very far, right? So if you want to be a 5 percenter, there's patterns at the, dealing with these people, studying them, looking at their lifestyle, look at how they think, about money. Yeah, it's a pattern, and we share these with our clients, right? That's the whole objective, to show you how to emulate what the 5% do, right? Or the 4%, because that 1% that's wealthy, we don't want you to hurt yourself, right? So listen, that's it. That's about 30 minutes. We don't try to stay on here no longer than that. JoshuaPondexter.com. Avail yourself of a consultation. On Mondays, we started a new show called Health and Wealth. The last month, I had 5 people contact me who was dying of cancer, who was in nursing homes. At the last ninth hour, they were looking for strategies to protect their assets so they can transfer them to the next generation. That's too late, people. So you create your permanent tax strategy up front. So included in that tax strategy is not to give your stuff away to the United States government, not to return all that hard work you have did, right? Okay. All right. Thanks for tuning in. We just had salutations, no questions on this is also, you can ask questions, you can make comments, right? So none of that. We appreciate you. We're going to go ahead and get our weekend started. Bye for now. Love, peace, and soul.